Good morning, everyone. Am I audible? Let's begin with the class today. We're going to talk about corporate valuation. Good morning, everyone. Am I audible? Yeah. Chale, it's all set now. Let's begin with the class. We're going to talk about corporate valuation. Okay, everyone. What do you mean by corporate? It starts with the word corporate, and then we'll talk about the term valuation as well. So, what do you mean by the term corporate? The term corporate is linked with corporate can be stated as something which is company, है ना? But these companies have to be valued now. If you don't value them, what will happen? These companies will face a lot of problems. Why? Because when you are trying to buy a new company, when you are trying to boost your confidence and tell the industry that you are leading it, how will you tell the industry? Till the time you don't value yourself. The valuation of a company will help them to boost the confidence to grab a position in the top competitors as well, because you know where you stand and how you want to reach and where you want to reach, isn't it? So this is related to that specific area altogether. So we'll be today talking about corporate valuation. Okay, so let's begin with the MCQs. Let's talk about it. Here comes the first question. Which of the following does not appear on the profit and loss account for a construction company that that specializes in real estate? Acha, what do you mean by real estate, everyone? Real estate is a particular industry which talks about land, है ना? Revenues from apartment sales, interest on the repaid of the interest that is repaid to the financiers, then cash that was put into the bank, or expenses related to depreciation. See, when you are involved in real estate, you have a building. That building is used for years. When it is used for years, its value will also be changing a lot. So ultimately, can I say in this case, first pointer, revenue from the department apartment sales is basically something which I can call this is allowed because this is from the business only. Then second is interest that is repaid to the financiers is also a part of the business only. Depreciation is also there. The last is the cash that was deposited into the bank. This is something which is a part of balance sheet. This is a part of balance sheet, everyone. Rest is not, but this is a part of balance sheet. Chaliye. Second question. It is expected of the valuer to conduct himself the professional manner and objectivity at all times by ensuring that his decisions are made. See, the valuers are doing it for different purpose, maybe doing it for the business, maybe doing it for someone else's business, and they would be looking forward to it, है ना? So in this case, it is expected that the valuer to conduct himself in professional manner. What will he do? Without existence of any kind of prejudice, that means he is not being predetermined about something. He hasn't assumed something. With the use of force, people use force. Then if they're not using force and you get to know about it, with full assurance or without excessive influence of any party. See, the point is it can be any of these things. Without any existence of the prejudice, or you can say with the use of force. With the use of force, if he's working, then how will he value things in an unbiased manner? With full assurance, if you're giving full assurance, everything is fine, then you will not give the true view as well. Then without excessive influence, there is no meaning of influence altogether. Excessive is a different word. So in this case, the answer would be A. Without the existence of any prejudice. That means to judge. Okay? So this should be the answer. Which of the following is not a place where records of sales of real estate in a certain area can be gathered? Sales data available to the registrar office, newspaper advertisements, information about auction sales from various authorities, or equity. What would be the answer? Which is not a place to file real estate data. So first is registrar office, you will get the data. Newspaper advertisements, you will get the data of all the places where there is a vacancy, right? The area is available for sale or in terms of tenancy. Then you get the information about your competitors as well, not you in terms of the working there. Then you will also be able to see your competitors. Information about auction sales from various authorities or equity market. What would be the answer? I believe the one place is equity market. Why? Under equity market, you will find the value of shares, not the value of real estate. You will never come to know what's the price of a 14 Marla plot, but you can find out the share price of MRF tires, right? So in this case, the answer would be D. That is equity market. Next point. Which of the following valuation techniques is best for evaluating the owner-occupied, non-income producing residential bungalow? Acha, I have got a bungalow. The place is quite near to someone else's place. Right, this is my place, this is someone else's place. So if both of us are living near to each other, then how are we working? Everyone, how are we working on these things? Discounted cash flow, whatever cash flow is being generated from this house, there is no generation of the profit there. Why? Because in this case, if we are generating any kind of profit out of it, how are we generating it? In this case, one thing is clear when we are working, that it's a non-income producing. I live in that house, so there is no generation of cash flows. Direct sales comparison, that is what we can do. Profit approach, we are not selling it, so if we don't know the value till the time we don't sell that thing. Then comes the era of hypothetical construction plan. For something which is hypothetical, why would someone pay? Why would someone pay, and how can I give a conclusive valuation to it? So one thing is for sure, this is wrong, this is also wrong, and this is also, no, this one's right. Why? Direct sales is right. This house was of 10 Marla. This house is also of 10 Marla. This was sold for let's say 1 lakh, random amount. Then this house has been stated that what would be the value of this. He'll compare what's the value. Does this house has a parking space? Yes. This is near the turn, while this is park facing. Then is there a proper sufficient sunlight in this area? No. In this house it is. In this area, we have an option to extend it further. This is fully constructed. more of it is already covered. In this case, you have a lot of scope for improvements, so you can actually make it better for your living. So though there are so many things that we'll compare now. It is called direct sales comparison method. Which of the following amount to direct cost and is included in the replacement cost? Material expense, then financial expense, legal or license. Which of the following amounts to direct cost? Material, financial, legal or license. It would be material expense, everyone. All these remaining expenses are indirect. Done? Now comes, what do you mean by what does EBITDA? Multiple represents in valuation. It reflects the company's profitability before non-operating expense. It represents the company's total assets. It indicates the company's liquidity position, or it measures the company's debt to equity ratio. What does it talk about? EBITDA, that is earnings before interest, tax, depreciation and amortization. How do we find it? First of all, you find your profit, you add back tax, what you're left with, net profit plus taxes before tax, then you add back interest as well as you add back depreciation. Once you add it back, you get it earning before interest, tax, depreciation and amortization. So in this case, what would be the point? It reflects the profitability before non-operating expenses. It represents the company's total assets. It does not. It's a kind of profit. It indicates the company's liquidity position. No. It tells what we are earning. Then debt to equity ratio. This is debt, the money that I borrow from outside, and this is equity. Equity is the money of the owner, right? So in this case, the correct answer would be it reflects the company's profitability before non-operating expenses. Chaliye. Now let's talk about the next one. Which of the following factors is not considered in terms of the corporate valuation? Industry trends, macroeconomic conditions, employee satisfaction, or competitive landscape? In terms of corporate valuation, see, there are certain things which are in our hand and there are certain things which are just not in our hand at all, isn't it? So the ones which are not in our hand is industry trends. We're looking at the trends of the organization. Macroeconomic is political, legal, social and all. And then we have employee satisfaction. The last one is competitive landscape. I think this one would the answer would be employee satisfaction. Employee satisfaction is not something which is going to evaluate the organization at all. That would not be the point, but yeah, it can help us to find out the standing of the organization in the market. Where do they exactly stand, how do they work, all these things are there, but not this. Employee satisfaction is out of syllabus for that. Corporate valuation is basically company's valuation. In that particular area, employee worth can be taken, but not their satisfaction. PE ratio, everyone. What is PE ratio? Heard about this ratio? First of all, we have sales. From that, we remove the variable cost. Only the variable. What we are left is called contribution. Then what do? We take the contribution NV divided by sales. This is called PV, that is profit volume ratio. Okay, this is used in the area of costing. There are three ratios which have been very important, PV and PE. Now talking about PE. This is P is market price, E is earnings. That is MPS upon EPS. In this case, we are trying to find in terms of earnings what is our market price today. Done, everyone? So in this case, when we talk about this ratio, this is dividing the market price by earnings, multiplying by earnings. Acha, the name is written and I have given the answer to you already. Then is dividing the book value with the earnings and subtracting. None of this actually will work out. It is MPS upon EPS. That would be this. It's not a book value. This is market price. It is actually PINA. So sometimes it looks like it is about market. It is about the people there, but this is not. This is about the market price. Done, everyone? Okay. Dividing the market price per share by earnings. MPS upon EPS. EPS is the earnings of the organization. How do they find it? Whatever your net profit is after your dividend for preference shares as well. Whatever is left divided by number of shares. Number of shares, in terms of it, you will find it per unit, na? Or per share. You will take up that per share value. So in this case, what would be the answer? The answer would be A. Next point. In terms of discounted cash flow technique, the discount rate is used to estimate the terminal value, discount the cash flows to their present value, calculate the cost of equity, or determine the market capitalization of the company. When we are looking at the discounted cash flow, we are trying to find out what would be the value of something which we'll receive in future. What would be its value today? You know? So when you're trying to find out what would be the value of something that I receive in future in today, that is something which I can call discount future value to the present value. If I say after 5 years I will receive 1 lakh. So what is the value of that thing today? That is to be taken here. Done, everyone? Next point. Which of the following is not a method of corporate valuation? Discounted cash flow, comparable company analysis, market capitalization ratio, or price to earnings. First is discounted cash flows. It is always there. CCA is there. Then PE ratio is there. There's only one point, that is market capitalization ratio, which does not exist in this area. Okay? This is the only point which is not a part of corporate valuation. Rest everything else is. Okay. So that's it for the day, everyone. I'll be meeting you in the next class. But before we end the session, just look at our website, that is www.adda247.com. Go on to the area of CAIIB if you're looking forward towards the classes. All you need to do is you have to go on to the area of JIB and CAIIB. In our vertical, you will find CAIIB November 2023. This is our area, everyone, and this is double validity is going on our Mahapack. If you want to purchase it, this is the right time, and you can use the code BAPU80, and then you will be able to get this pack. Under this pack, you get English medium as well as bilingual, both classes opened up for you, revision batch included, as well as you will also get the area of mega marathons as well as the mini marathons. Everything is included. Along with that, you will get test series and ebooks and many more things are added into this every now and then. Currently, we are also providing mock test papers and doubt sessions as well on Saturdays. That is second and fourth Saturday. So if this thing really helps you, then kindly go ahead and check it out on our website or in our app for further details. This is one of the most beneficial packs because at this point of time you'll spend for 6 months and you'll get for 1 year. You spend for 1 year and then you'll get it for 2 years. So this benefit is available for a limited period. Till then, check it out on our website or in our app. Oh, just a moment, everyone. Let me show you there. I think this is visible now. Just go on to the area of www.adda247 and this is where you'll find it in the CAIIB Mahapack. All the details of it are available there. 129 mock tests, 970 lectures, ebooks and 500 hours of live classes. So go ahead and check it out. Plus this also includes all the 5 electives as well. So that means you can choose your elective accordingly if you haven't applied for this registration in this attempt. If you have, then you can find your elective there and go through the classes. So thank you so much everyone. We'll be meeting tomorrow.